The last months of 2022 were turbulent for most market sectors, especially the crypto market. A spiral of events leading to what is known as the market contagion has engulfed the crypto industry. Regardless of the unpalatable situation, investors are bent on chasing what is hot, whether it's non-fungible tokens, meme coins, or lending platforms offering unrealistic yields on deposits. Some might turn out to explode and yield huge returns, while others might not. It is not tied to luck, but to conditions surrounding the crypto market. No doubt it's a new year, but things still look like the same situation for cryptocurrencies. The majority of news reports are still talking about how the past year was quite sour for the market, and how this year is plagued with a high degree of uncertainty. Notably, there was a series of events that played a major part in the downturn of not only the price of the pioneer cryptocurrency Bitcoin, but the entire crypto industry. This series of events was instigated by the collapse of the algorithmic stablecoin Terra, starting in early May of 2022. 75% of the total circulation of Terra was held in a lending and borrowing system called the Anchor Protocol. Terra holders were rewarded for depositing their coins in the Anchor Protocol with a fixed 19.8% interest rate that turned out to be unrealistic and unsustainable. The collapse of the Terra ecosystem negatively affected a lot of crypto investors, but there were bigger problems. A crypto hedge fund, known as Three Arrows Capital, had no retail customers, but it borrowed money from many crypto lending platforms such as Celsius and Voyager. The company made a lot of risky bets with its borrowed money as well. Some of the money was invested in startups, but hundreds of millions went into crypto-based investment strategies, including $200 million in Terra. When Terra crashed to zero, Three Arrows Capital suffered weighty losses and could not repay its creditors. The impact was global and severe, but the FTX collapse proved to have the worst repercussions. In November of 2022, the crypto market got the biggest scare when the FTX exchange announced bankruptcy. But 2021 was a spectacle year for major cryptocurrencies like Bitcoin, Ethereum, and Cardano, as they hit impressive all-time highs. 2022 proved to be an extremely rough year for them. This is not just a tale of these three cryptos alone. Other tokens like Dogecoin, Avalanche, and Solana also punched greatly. So I guess a question we can ask is, how did we get here? The experts blame the crypto plunge on various factors, like rising inflation, interest rate hikes, and economic uncertainty that propelled investors to sell risk assets throughout the year, and it also led to the fall of popular crypto projects. Anyways, it is easy to say that FTX collapse was a major factor. Indeed, 2022 will be etched in the memory of crypto users for a long time, as the unprecedented event shattered investor confidence, caused many longtime faithfuls to question their stance, and harmed prospective investors. With all the trouble encountered in 2022, the main question on everybody's lips is, what will 2023 be like for the crypto market? Well, the current situation is a mix of worry and uncertainty about the future of crypto. Of course, regardless of the sentiment, crypto is here to stay, and from a retail perspective, new customers entering the ecosystem have slowed, but those who are entering know all the risk and are well equipped to combat volatility. The battle is really for the season. 2023 will undoubtedly be a stepping stone of crypto being regulated and the beginning of a new era where we will move towards mature communities, projects, and investors with adequate information and knowledge. While the bear market has caused many investors to rethink their positions, Cardano supporters have not stopped believing in its bullish future. The crypto space is quite dynamic and transformations keep taking place at a rapid pace, but fundamentally strong cryptocurrencies are here to stay and will continue to grow in the future. The question of whether crypto will recover sounds like a grim one. Opinions on its recovery in 2023 are currently divided. As of December 1st, 2022, most altcoins were down 90%, with Bitcoin and Ethereum down over 60%. According to an investor, Mark Mobius, Bitcoin could fall as low to $10,000 in 2023 from its current value. The CEO of crypto tax software, CoinLedger, David Kremer, feels that this crypto winter is here to stay for some time. Then he blamed this on macroeconomic factors including 40-year high inflations, rising borrowing costs, and political instability after Russia invaded Ukraine. It is too early to draw a conclusion, but ultimately the fate of crypto in 2023 rests in the hands of the US Federal Reserve System, which determines the monetary policy that ripples throughout the global economic system. Not everyone is so down on crypto though. Some feel that crypto will recover well. Optimistic investors believe that by the end of 2023, Bitcoin will soar high to a valuation and other cryptocurrencies will follow. Frankly, crypto could still go either way. Cardano is looking to rebound in 2023, of course. Currently, the cryptocurrency is trading at just 25 cents, more than 90% down below its all-time high of $3.10. Just like many imagine, the majority of Cardano investors have soured on Cardano, which is sitting at the 9th largest cryptocurrency by market capitalization. At this moment, the consensus estimate is that Cardano will have an arduous time, even doubling in value to 50 cents, which was the point it was trading at in August of 2022. However, despite overwhelming limitations, there is a best case scenario in which Cardano hits $1 in 2023, given the developments that have been taking place over the last 12 months. A major complaint that has always dominated the criticism against Cardano is that it is a quote-unquote ghost chain, where nothing of importance is happening. In a way, the criticism is true, because Cardano has always seemed to lag behind huge market leaders like Bitcoin and Ethereum, especially when it comes to new innovations. For instance, Cardano has only managed to introduce smart contracts in 2021, and for investors keeping records at home, that's a whole 6 years after Ethereum ushered them into the crypto world. Based on the metrics, it appears that Cardano's slow and steady approach to blockchain development is finally starting to pay off. Sentiment recently noted that Cardano was the #1 blockchain in the world in 2022 by development activity. This is large because of how much code Cardano developers were adding to open source repositories such as GitHub. Development activity is key, and this is because it is an indication that new features are on the way or new products are about to ship. According to a few Cardano reports, 2022 saw a massive spike in on-chain growth as measured by metrics such as blockchain wallets, overall transaction activity, and new partnerships and collaborations. Now that smart contracts are live on the Cardano blockchain, it is unveiling new opportunities in different market niches of the blockchain world, especially decentralized finance. All of this could pose new momentum around Cardano in 2023. It is also important to note that Cardano's entry into the world of decentralized finance is a feat worth celebrating. Without the launch of smart contracts, Cardano would not become a significant player in DeFi, so this means it was a non-player in this market niche until late 2021. Moreover, without a great presence in DeFi, it was impossible to show major progress in total value locked, and this is a key metric that investors use to gauge activity on a blockchain. Currently, Cardano ranks only 31st among all blockchains in terms of TVL, and this is one of the reasons why naysayers claim that nothing is happening on Cardano. Nonetheless, Cardano is ready to hit it out of the park in 2023 when it comes to the aspect of decentralized finance. This will help boost TVL numbers, which will in turn change the negative ideas of people about Cardano. There is at least 3 different DeFi projects on Cardano that are generating buzz right now, which are the new decentralized exchange, a new non-fungible token marketplace, and a new DeFi protocol that enables the creation of synthetic financial assets. The goal of a synthetic asset is to imitate the price movement of a real-world financial asset, such as a stock, a fiat currency, or a real estate title. A big announcement at Cardano that has many crypto investors mesmerized is the planned introduction of 2 stablecoins in 2023. Since stablecoins are one of the hallmarks of decentralized finance, this is potentially a piece of breakthrough news for Cardano. Since Cardano ADA is just trading for 25 cents, a price target of $1 looks very unlikely. Many things need to go right for this to occur, some of which are actually out of Cardano's control. From the looks of things, all might go well for crypto in 2023. But if Bitcoin tumbles another 65%, it is very hard to keep one's hopes up and imagine any scenario in which Cardano spikes to the $1 mark. Nevertheless, let us keep our fingers crossed for Cardano ADA. But of course, what are your thoughts on this? Let us have them in the comments section below. We'll see you in the next video, but before then, check out our other videos to find out how Cardano is living up to the dream of being the Ethereum killer. And as always, make sure you click on the subscribe and notification buttons.